It's a commodity that is subject to manipulation over there in the COMEX over in New York. The money used to keep the price of gold cheap by leasing out gold to gold speculators who sell the gold and then buy it back at a cheaper price, manufacturing profits for themselves. The amount of money it takes to keep the price of gold suppressed, like money to keep a lot of other markets manipulated, is running out. You see, the thing is, like, if you remember Ghostbusters, Stacy, they put all the ghosts into this little, like, box. And then the box got so full of ghosts that it exploded and all the ghosts came out. Now, the gold suppression schemes are like that. They are trying desperately to keep the price of gold down. The price of gold at $1,000 an ounce, yes, it's hitting a new high, close to hitting a new all-time high, but adjusted for inflation, it's still trading at a 60, 70, 80, 90, 100% discount to where it should be trading had there not been massive fraud and manipulation in this market on the COMEX. So once the money runs out to keep the price artificially low, you're going to see a big jump in the price of gold in one day. I mean, what if gold were to jump by 20, 30% in a day? So what? It's only like a $4 to $4.5, $5 trillion piece of business. Really, all the gold in the entire world at the current market price is worth something like $4 trillion versus hundreds and hundreds of trillions of dollars worth of bad derivative bets that are going bad. So as even one fraction of that money finds its way into gold, yeah, you could see gold price jump $200, $300 in a day. You know, it reminds me when I started on Wall Street, Stacey, in 1983, 82 and 83, the Dow Jones was under 1,000. And people talked about, will it ever break 1,000? It seemed like an impossibility that the Dow Jones would break 1,000. And it tried several times to break 1,000. And then finally one day it broke 1,000 and very quickly went to 3,000. And of course it topped out at 14,000. Similarly in the gold market, now that it's firmly above 1,000, once it does get firmly above 1,000, I think the move to 2,000 is going to be quick. And then the move to 3,000 and 4,000 will be quicker still. And I'm still keeping with my bet that the price of the Dow Jones and gold hit parity, 1 for 1. So you could see the Dow Jones at 4,000, down from the current price of 7,400, and the price of gold at 4,000. That's a 1-to-1 parity.
Well, interestingly, I was watching Financial Sense this morning, and Frank Barbera said regarding the gold price that now that it's over 1,000, there are frequent mysterious drops in the price of gold, as everybody knows in this whole bull market, where nobody quite knows where the sellers come from, but they suddenly the market gets swamped by big giant sellers. So he reckons that it could be ripe for that at this moment. This is the sort of moment that they tend to come out of the woodwork and smash the price of gold. So he said on a technical reading, the technical reading is that the price of gold could fall back to 850 before beginning its up leg again. He said, however, the fundamentals could override this technical thing if, say, one of these Eastern European nations collapse, or the U.S., Citibank and Bank of America are nationalized. But regarding these technicals, this is one of those sort of break moments, isn't it? If you look at the chart of Lehman Brothers for 180 years, the technicals were suggesting that right now, technically, it shouldn't be zero. It should be like $75. You know what I mean? It follows the technicals until suddenly the whole system collapses, and then there are no technicals.
Well, the point that I want to make is that, as Frank Barbera is suggesting, that you see these sudden down moves in the price of gold, which are quote-unquote mysterious. I think having designed trading systems myself and having a patent on trading systems that are used by banks and brokerages right now, the virtual specialist patent, which is referenced in dozens of other patents used in the global derivatives trading markets, I can say with authority that I know when markets are being manipulated. This is unlike, let's say, GATA, which has their source of research, and they conclude that these markets are being manipulated based on their analysis, but it doesn't include an analysis of the actual trading mechanisms of the market itself, of which I'm probably one of the foremost experts in the world. And I can tell you without any equivocation that this gold market is manipulated on the COMEX. And I can tell you also, in my belief, the amount of money it takes to keep the price of gold artificially low by the Ponzi scheme wielding bankers and central bankers around the world is running out. And once you open this floodgate to price discovery on the COMEX to reflect true demand, you're talking about $2,000 an ounce. And it could happen quite suddenly. Now, I've made this call before back in November. If you recall, I was on Alex Jones' show, and I suggested that in December there would be a failure on the COMEX and the price would jump quickly on the month of December. It didn't happen. So, okay, I'm not going to go out on a limb today and say it's going to happen this week or next week. But I will say that in my analysis of the way that these markets are being manipulated, as I see it, and as I understand it from looking at the trading patterns, the time during which the manipulators can keep the price artificially low is running out.
By the way, I might want to add another dimension to this gold story was the prices rocketed in the last week. Yeah. And another thing has happened over the last week. Of course, it's still not at anywhere near, as you said, even all-time highs, inflation adjusted.
Yeah.
So the moves right now are just primarily being driven by governments. Probably Russia just admitted that they bought 90 tons of gold in the last year.
Right.
And very wealthy people. And most of them, I would say, are probably buying it via Switzerland and Austria.
Okay. And Richard Russell, who's a very kind of established technical analyst,
who was alive during the Great Depression and writes some fantastic stuff about it, by the way. That's
right. He talks about gold and how it plays into various countries' reserves and what these various countries might do going forward. So the U.S. apparently owns 8,135 tons of gold, and it makes up 64.4% of their reserves. There's some question as to whether the U.S. still has 8,100 tons of gold, but apparently they do. And it makes up 64.4% of their reserves. They have the most gold of any country in the world. Next comes Germany with 3,400 tons. It makes up 64% of their reserves. Then we've got countries like France, who've got 2,500 tons. It makes up 58% of their reserves. Italy with 2,400 tons. It makes up 61% of their reserves. Switzerland has 1,000 tons. It makes up 23% of their reserves. Now, here's where it gets interesting. Japan only has 1.9% of their reserves in gold. And they've got 765 billion...
tons. 765 tons.
No, 765 tons of gold, and it makes up just under 2% of their reserves. So Richard Russell's making the point that if Japan really wants to get into the global game here, they need to be a big buyer of gold. China, they've got 600 tons. It makes up less than 1% of their reserves. And similarly, they could be a big, big buyer of gold. Russia has got just under 500 tons of gold at 2.2% of their reserves. And they are actively right now buying gold.
Yep. That was just quoted in the press this week.
So if you want to front run Russia, who's a big buyer of gold, you can be a buyer of gold. Then you've got Taiwan with 422 tons at 3.6% of their reserves. They will probably be a big buyer of gold. India, 357 tons of gold. That's 3% of their reserves. They will probably be a big buyer of gold. In the UK, of course, the story is tragic. They have 310 tons of gold. It makes up 14.5% of their reserves. And Gordon Brown, as any listener to this show knows, sold out 300 tons of UK gold back when it was at the cheapest it's been in decades, back when it was at $250 an ounce. And now they could be back buying gold again.
Speaking of front running.
At the top. After it's already moved a considerable amount. So Gordon Brown really earning his stripes as a horrible market timer. Saudi Arabia, they've got 143 tons of gold at 11.4% of their reserves. They could be a big buyer of gold. So these big banks, central banks, who are now have been net sellers of gold for years, buying into the theory that you don't need gold, what you need is cash, and then you need to spin that cash into derivatives, cotton candy, spider webs that are going to make everybody rich, has collapsed. And now they're back buying gold. And they're big buyers.